Now I want to show you something. Someone messaged me in YouTube to send me this. It's interesting because I normally don't look at what happened to gold and silver at 1, 2, 3 a.m., 4 o'clock in the morning when Hong Kong is open, because you can still trade during those time periods. And usually it's not a lot happening. It's not really worth paying attention to. So someone had mentioned, hey, check this out, and the guy made a video about it, and I know exactly what he's talking about. So on the screen behind me, you will see my mouse moving here. And this is approximately like 3 something in the morning. I don't know the exact time. This is gold, by the way. Current September's gold contracts. Again, paper contracts. And you'll notice this little cliff here just falls straight down till here. It's really a matter of minutes. Not I don't know the exact time frame, but a matter of minutes. Maybe quite a few minutes. I'm not sure. I can't tell from the size of this chart, but it was at roughly $1,910, and it went down to roughly 1865, 1864. We'll call that 1865. So 65, 75, 85, 95, 05. We're talking $45, $50 move somewhere in that neighborhood, like that, basically, with no buyers. So down here in the second bottom part of this chart where it says volume, you see this big red candlestick. This is that order to sell, and this is what pushed the price down to here, which is around, it's actually around 1860 when I looked. So here it's showing around 1864, 1865, whatever. If you look down at this bottom chart, there's that red candlestick. There's that big push to sell and push the price down because there's no buyers, which of course pushes the price down at that point. And if you can see where my mouse is moving, there's no action in here. There's nothing going on in here. And then right over here, we start to have a little bit of volume. There's one. There's another one. Then we have a big jump here. On this one, which is around 21, it shows. So we had that big sell volume was 25. The bigger buy volume, the sell volume was 25. The buy was 21 over here. So if this is, again, this is a matter. Let's just call this a half hour. All right, let's be fair. Let's just call this about a half hour's worth of time. If you were here, price was 1910. If you had a contract while you slept in the middle of the night, you had an open contract out there hoping when you woke up the price was higher in gold, you could sell it, make a couple bucks in your paper contract, you may have woken up to a margin call. And then you would argue, well, hey, in 30 minutes, it was already almost back up to where it left off. I mean, it climbed back up to like 1905. It was 1910. It's not a big deal. It wasn't that big of a move in gold. So, hey, why you give me a margin call? Well, because that 30-minute period, it was 1910, and went down to 1865 or 1864. You did have your stops in place at, say, if it was 1910, and you said, well, I'm going to put my stop in at 1900. I'll take a little loss, and then I'll figure things out the next day where I want to get back in at and see if I can make up that little tiny loss. But if there's no buyers, it keeps going down. So it went down to, look at that. Pastor Dowell. I'm going to have to put him on hold for 1 second while I finish this video. Or not hold, but I'll answer it in a second. So anyways, what this is showing you is that little 30-minute period, there's a ton of people who probably got margin calls. Their accounts might have even been forcefully closed out by the brokerage firm that's handling it. Because again, it's all leveraged and you're using the brokerage firm's money. 10 to 1, they're funding you the 90%. You're only playing with 10%, so they have the right to liquidate your account at any time. So if your stop goes down to a level where it says sell automatically in the middle of the night, it'll do it. But if there's no buyers, the price keeps going down, and the next time there's a buyer, your account will finally sell. Who knows what the price is? In this case, it was 1864, 1865. May have been way too low of a stop position for most people, and now their brokers are calling them, hey, you just got, we just had to close out your account. I'm just saying, that's why you don't play the paper game. And at the same time, this just goes to show you, even in Hong Kong time, if they want to get you, they'll get you. It will happen. They will do it. So More reason to stop with the nonsense paper game. I don't care how lucrative it is. I get to play with 90% with or 100% value with only 10% of the money. Man, I just got to get in there. And then you get cleaned out just like these poor saps. God knows how many people just got cleaned out in a 30-minute, 15-minute, whatever span of time. Now they're upset. I thought I could get in on the action on gold. And you just got handled because you played with a piece of paper that didn't even exist to begin with. Didn't have gold backing it to begin with, but they're not going to tell you that, nor can you prove that they didn't. The only way you can prove that they didn't is if you'd stop being a fool and get real physical gold or silver instead of playing the paper game. It's the only way. The rules are designed for them to win, not you, not me. The only way we win is by not playing their game. So what's the alternative? Get the real thing. Real physical, real silver. Have a nice day.